The New Zealand market to yesterday is up around about 19% in US dollar terms and about 14% in New Zealand dollar terms. So really that outperformance is quite significant in the context if you looked at the US market and you could see what the S&P had done, which is around about 12-13% year to date, and that New Zealand has actually significantly outperformed that market.
Why is that?
Why is that? Good question. I think what we have seen, and one thing that we're trying to show to our investors, is really just this chase for yield, and that's pushed up stocks where there have been that sustainable yield. A lot of New Zealand investors are very focused on earnings yields, so they're looking for dividend income, they're looking for strong businesses. I think in a New Zealand environment, and it's topical with the election, is that we've got a great regulatory regime. We have had and continue to have political certainty. We've got environments where these companies have reasonably good earnings visibility, and the market's really rewarded that and pushed those prices higher throughout the year. The other area that's done very well are growth. So generally with the yielding stocks, they tend to be lower growth. The companies like A2 Milk, Fisher & Paykel Healthcare, they've really done phenomenally well this year from a stock price appreciation, and that's just investors looking for growth.
Is it partly due to the fact too that we have very few, perhaps, growth companies listed?
I would agree with that, Mark. I think that's the thing. You have seen investors crowding or herding into these stocks that have performed very well. And look, it's from bottom-up fundamentals too. And a company like A2 Milk, the market's really rewarded that earnings growth that you've seen. A lot of that's coming from China. Sitting in New Zealand, it's very hard to profit from China if you look at the New Zealand stock market. So you look for companies that are levered or have growth opportunities in China, like A2 Milk. Comvita was another stock that had obviously Manuka honey that is very popular in China. So I think that is the thing. In New Zealand context, the growth stocks that have done well have rewarded investors, and I think also in a context where some other growth stocks haven't really delivered on their promises. So some of the software companies, perhaps where there's a lot of growth priced into the stocks, haven't been able to capitalise on that, and so that's caused even more investors to be in the names that have performed well.
How is the market perceiving the current political hiatus?
So before the election, the currency was around 74 to the dollar. It's now gone lower to about 72. Moving around, but I think that's for foreign investors the most liquid way to express a view on New Zealand is effectively through the currency. But we haven't really seen too much impact in the stock market yet. Still very much a situation where the good companies are still performing. It's bottoms up driven. Kathmandu, which is up today, announced solid results. We haven't seen at a market level any real impact.
There's no question that Winston Peters is a more interventionist politician. What sort of impact do you think that's going to have?
Being an interventionist for someone like Winston, it's actually the practical ability of doing that. We hosted Shane Jones at a pre-election gathering, and what was very interesting for him, it was about cutting out red tape. So you've seen one of their policies is on forestry, and really wanting to add value. A lot of New Zealand's logs are exported overseas unprocessed, so he's really about adding value in New Zealand, processing those logs, which actually from a New Zealand perspective is great. I think that's one problem in New Zealand, is that a lot of commodities are sent overseas unprocessed. If we can add value here, ultimately that can add value to the country. So in my view, really, it seemed far more practical in terms of actually trying to enhance business. He was also talking about corporate tax cuts. Yes, there are things, say, on the minimum wage side to increase minimum wage, but he's offering a tax cut for corporates at the same time, so that would be definitely a positive.
Would this therefore bring export stocks more into focus?
That's right. I mean, in a New Zealand context, say something like forestry, we don't really have listed forestry or pure play forestry stocks, but something like Port of Tauranga. Winston's been very vocal about Northland Port and basically Really just enhancing the Northland by that infrastructure. So he's pushed rail and extending the rail lines to Northland, and really just that effort at Northland could be something that Port of or Northport is listed, or a holding company owns it. That could be something that could get reflected in that share price if that was something that was policy that either party that he goes with agreed to pursue.
So what sort of strategies do you think investors should be adopting at the moment?
I think from a longer term perspective, you've got the new governor coming into the Reserve Bank on Thursday. I think just given the environment, the likelihood is, in Bloomberg consensus estimates are that the interest rate will stay unchanged, the OCR. I think our view really is that with the rates and rates low, that's actually an opportunity for assets to appreciate, and that's really what you've seen, liquidity flowing into, whether it be the New Zealand stock market, you've seen it in New Zealand property. So we don't want investors to necessarily miss out on the appreciation. Yes, there is a time to be cautious. I think another view that we have is around the New Zealand dollar. You've seen that weaken. I think our view is that the US dollar, once the US start to raise interest rates, the US dollar should strengthen. So now could potentially be a good time to invest offshore, take advantage of a slightly higher, or potentially higher than what will be, New Zealand dollar to diversify internationally.
How about Australia versus New Zealand? We're talking obviously US there, but what about our nearest neighbour, Australia?
We're a little bit cautious on Australia. There has been some promising economic data released in the last few months, but I think it's been a very difficult market as an investor. Take, for example, the banks. There was the banking levy announced. There's obviously been this money laundering scandals. The banks comprise a very large part of that Australian market. So what we're telling investors is really look a level below and really try and dig out, and along with our research capability, we're trying to be more selective, identifying stocks from a bottom-up perspective that can really deliver results, and some of those may be Australian dollar weakening beneficiaries, so the exporters, but it's not just by the market, it's very much be stock specific.